Good morning, traders. I'm just going to hop on here, make a quick video, and yes, I am still sick. Just want to visit with you a little bit about yesterday's price action. It was a very difficult trading day in my book. We had giant moves both directions, 100-point moves in 15-minute candles, going up and down and up and down, and not really taking out the lows or the highs, just getting close. That one did take out the high right there. I think I may have taken a move there. But down here at the bottom, I have marked out from the 1 minute chart, the first presentation fair value gap of each index. So over here you can see, let's see. Okay, so we opened right there. I don't know why I have it all the way back there. It's all the way over here. Okay, so we opened over there. We came down. There's our first presentation fair value gap right here. It's a little bitty. I guess I grabbed a hold of it and moved it at some point. Little bitty guy. It's right there. Okay. When we traded up a little, we came and poked it right there. So let me make sure I didn't move it over here on the Nasdaq. Okay, so we opened here. It's actually right here. First presentation fair value gap for Nasdaq is right there. Okay, we opened, we traded down, made a little fair value gap to the downside, and over here we did the same. So from a 1 minute perspective, we did touch it there and then go to make quite a move up. When we came back down, we violated it big time. But then we started trading up. The one trade that I felt like was a decent trade was because of this divergence. When we came up here, I mean, you could have gotten in there for a run up, but it was early, real early and very volatile. Well, we came up and we took out this high, but we did not take out those highs. So my hypo became we come back to this first presentation fair value gap or possibly this order block, and then we rally. Now, on ES, we actually took out the low, but we left the sell side from the daily chart. So, and while NQ did not take out the low, that's a divergence. That's saying there's a good possibility we could go higher. So I waited for it to invert this fair value gap, and I went ahead and took a long there. Actually, I think I took my long here, and I used this little spot right here as my take profit for most recent swing high, because I still was thinking we might go lower at that point. When it comes back down and touches the first fair value gap again and respects it, then you're pretty safe to take a long. But it was such a volatile day. I mean, these are 100-point swings, 100-point swings. That's 118-point retrace back to the first fair value gap. And over here, we're violating that first presentation fair value gap. So it was difficult to trade with any sort of confidence. I did manage to get one decent trade, make a little bit of money, but it was a nail biter and it felt like a gamble the whole time. You would call that a high resistance or seek and destroy type of day. It was difficult. Not gonna sugarcoat it. And if you didn't do well yesterday, don't worry. I guarantee you're not alone. It was just a hard trading day. Thursday wasn't much better, but hey, next week, first of the month, we're going to start having those big numbers come out. Don't be in the market when the big number comes out. Just wait for it to calm down. Sometimes afternoon is better time to trade. Just fade those extremes. When it takes out a low, go long. When it takes out a high, go short. That's be your best bet to make some money. Continuation days like we had this week are rare. They really are. Even on continuation days, it eventually finds a low that it wants to take out and run up higher. And even if it just briefly takes a low and then runs higher, it may just go take out a recent swing high like this one, what I put on there. That's a valid trade. But fading the extremes is your best bet to becoming consistently profitable. Remember to be kind to yourself and be kind to one another. I love each and every one of you. And until next time, trade well.